Welcome, everyone. Thank you for joining us today. I'm 𝗖𝗍 Biniaz. I'm joined by 𝗖𝗍 Benesocky. Welcome, 𝗖𝗍.
Thank you, August. Hello, everybody. Thank you for joining us today. We are joined by my good friend, Jodi Vetterl. Welcome, Jodi.
Welcome, Jodi.
Thank you. Thank you so much for having me. I caught your little bit of your clip earlier on live on LinkedIn there. So yeah, it's really a pleasure and honor to be on your podcast.
Great. Yeah, we try to jump on LinkedIn quickly and put on a video on Wednesdays when we have our webinars, our YouTube show. So more than happy to advertise having you on. It's definitely a pleasure and an honor for you to spend the time to add value to our viewers' investment journey and have a great discussion. So definitely look forward to this and excited.
Amazing. And why don't we start off, Jodi, by you telling our viewers a little bit about yourself, of course, your background and your connection and interest in real estate.
Yeah, for sure. Thank you.
Sure.
Yeah, so my background is that I was working in corporate America, working for some big software companies like Autodesk and Ansys. And in the past 8 years, I had been working for Ansys, which was a really, really cool company, lots of innovation, selling physics and all these sort of different engineering disciplines. And then meanwhile, for the past 20 years working in that career, I was like, I'm making more money than I'd ever made. And, I was like, I got to be smart about this. And I really got to get myself educated. And I was very much attracted to real estate. And so I started, educating myself with some of these real estate courses and whatnot in the early 2000s. And so I had, around 15 years of doing more, like I didn't really have the time to do the flips, which is what I was most attracted to. My background is in design. I did, some environmental design program through Faculty of Architecture in Manitoba. And so my background was in design. So I was kind of excited. But romance versus reality, right? And I had a territory and I was living on a plane and I didn't have the bandwidth to do the flip and all that sort of fun stuff. So I kind of fell more into the long-term buy and holds, which is also a very, very rewarding and great strategy. And then, going back to my work in my mid 40s, I had my first child. And I was trying to sell engineering simulation software. I am not an engineer or a mathematician or a physicist. And so I was trying to, it was like being in university every day. And as much as I loved it, it was great. I was really exhausted as a mid 40, with the new baby. And I went back to work after mat leave and sort of kind of bumped up against my new boss. And there was just some challenges there. And it just got very apparent that this was not going to be long-term. So I had to figure something else out. And I didn't want to make a horizontal move and bring on a new company and a new learning curve and all that kind of stuff. I was like, if I'm going to do a learning curve, I want it to be my own thing. I want to be self-employed. I want to build a business. And I started dabbling with, I was provoked enough that I, got my spreadsheet, did a financial reality check, realized that I had hidden funds. I call them hidden funds because they really truly were. They were locked up in equity. They were sitting underperforming with financial advisors that had, it's long term, it'll pay off, whatever, and it was just never going anywhere. The story. And I just thought, what, if I reshuffle and restructure, I can free this up. I dabbled a bit in private lending, but I went full board on it and created a plan and a strategy that allowed me to actually leave my job. And I wasn't making necessarily as much as I was at my work, but I had a number. I had kind of a magic number that would be like financial independence, so that I could create the space in my life to, first of all, de-stress and can be, not be running and racing all the time. And then, just create the space in my life to write my book and build my program. And that sort of brings me to, what I'm doing today. So, yeah.
I
Awesome.
love it. I love it. She's an
Yeah.
educator. She's an author. She's obviously a thought leader. I personally see you as my personal mentor. So I
Absolutely.
really appreciate you and all that you've done. So maybe we can jump into, and you can tell us more about Beyond the Banks. And I love that name, by the way. That branding is my favorite.
The book, the brand, the platform, the service it provides.
Right here.
We'd love to
Beyond
kind
the
of hear,
Banks.
and also the journey maybe from the beginnings and how it came about.
Yeah, and it really was about that. It was really about just, there's that moment, right? Like, I think that a lot of people that leave their corporate job and they go into some sort of, stick their neck out and they go into some sort of entrepreneurial thing, they have this moment. And I had that moment it was around the stuff with my boss, but there was a very distinct moment. And I was like, and I just, it was like I had to just like believe in myself. And really what helped me believe in myself was the good old spreadsheet, right? You get your numbers down and that makes all the difference, because when you can see it in the numbers, then that gave me the confidence to really see, like, I can do this. Like, and it, believe me, it was a big mindset shift to leave a 20-year career and all that kind of stuff. But what was really cool was that a lot of people around me were like, wow, I'm quite open and transparent about talking about money and sharing, information and resources, because I kind of want this for other people too, right? Like I don't, I'm just like that. I'm just very open. And so I just found like I was spending all this time, educating people on it, and and it was kind of burning myself out a little bit. And I was finding like people weren't taking action. They'd be like, and then I would touch base with them, and then it was like, oh, it was excuses, or they hit a little roadblock. And I'm a little bit of a different character, as like when I really want something, I will persevere. Like I will like bulldoze my way through it and pave my own path. But I know not everybody is like that. And I know that those roadblocks can really bugger you up. Like restructuring and going and dealing with a mortgage broker, right? Our mortgage brokers, they're doing their best. They've been hit with so many more like regulations and everything. They just like want your whole filing cabinet these days. And it's very, and it's a big project. It can be a big project, right? Dealing with your financial advisor and moving money and having those hard conversations. A lot of people don't want to break up with their financial advisor, right? But that you have to realize that no one's going to ever care about your money in the way that it needs to be cared about, in the way that you need to care about your money, right? And so you have to, and I was just finding like there was all these excuses, and that really inspired me to put together not only the book, but it inspired me to put together like a step-by-step course program. It is an online 8-week program called Beyond the Banks Academy. And there is some hand-holding. There is like, I make myself available for one-on-one strategy calls and things like that, because I want people to be successful. And I find that they get into it, they get inspired, but they just need that one-on-one call. And once they have that one-on-one call and we scope out and strategize with their numbers in these strategies, then they're like, and you just see the popcorn going off in their head. And it's the coolest thing. Like, I'm very passionate about it. It really is it's a passion. It's my passion project, really, to help people take control of their finances. You don't have to deal with like a broker. You don't have to deal with a financial advisor. And I know there's great financial advisors out there, and I know there's a ton of mediocre and financial advisors, because I see it. I see what people like. I just helped a guy the other day who had $600,000 sitting in a registered fund that since inception of 3 years, it's only made 2.9%. Like, that just is like, like, to me, that's gross.
Compared to inflation, they're actually losing money, basically, I think.
Yeah. During the biggest stock market rally of our lifetime, it's like, how does that financial advisor justify that?
Right.
Like, it's brutal.
paper pusher sitting at a large bank, just punching the clock in some cases, and they're not involved. But what you say is incredible, because you know, a lot of people have great ideas, and this comes in business and startups and what have you. And a lot of us have great ideas for our personal lives, but it's that initial step that usually is the hardest step to take, is that start, and bringing on a coach, bringing on an expert, having a system to follow. You know, when there is a course for that financial freedom, for that financial independence, which, you know, takes people through the steps, and that's what we loved in you know, in what you're providing, and the, you know, the steps and the course. And yeah, and to tell us more, you also have plans to expand to the US, or you have already. Tell us about that step. And yeah, tell us more about the course.
Yeah, so yeah, it's been really exciting. We have, you know, really solid member base. We've just been over a year here in Canada, and I do have the program available in the US, and we have lots of resources and US investors that are learning a lot of the strategies. And in fact, it's kind of cool, because one of the things that that I'm just so I'm always so excited about it. It's one of my favorite things. It's an arm's length mortgaging using TFSA, and like, you know, tax-free money is the best money we can make, right? And it's been really cool to actually take that strategy and apply it to the US, because they have their Roth, and which is their tax-free. It's got other thing. It's got some rules around it that we don't have with the TFSA, and, you know, that kind of stuff. But for the most part, it's it can be applied. So it's very cool, and it's and then there's been some other sophisticated strategies that have evolved with Beyond the Banks Academy, with like insurance and these different arm's lengthening strategies, and it's really cool to sort of have been playing with these strategies for the last like 5 years myself, and watching it grow and then shift and pivot to really optimize, like tax wise, to optimize on tax-free money, and to be able to really grow the portfolio. My portfolio is growing. It grew more in 3 years doing these strategies than it did in 15 years dealing with financial advisors.
Incredible.
It's so great. Every time I talk to Jodi, she does tell me about how people are signing up to learn more, and you're helping so many people out. So
It's amazing.
yeah,
It's
really,
amazing.
really incredible.
Yeah, and your system is available also in the US. It can be duplicated and kind of used in the US. That's incredible. Yeah, if you
And I kind of wanted to dive into today's topic, Jodi, about passive income through private lending. So why don't you tell us more about your experience and involvement with private lending,
and how everyone can be a bank or be the bank. So banks always make money because they have the systems in place, and they lend money on an actual asset. Now imagine everyday person, you know, can use their investment to basically give out a mortgage. So we'd love to hear more about today's topic. And yeah, please.
Yeah, definitely. I mean, that is exactly, you know, the Beyond the Banks is such a play on words in so many different ways, because it's thinking like a bank. It's investing beyond your sort of our conventional ways of investing, you know, as sort of that retail banking, you know, where you go in and you do your RSPs, and it goes into mutual funds, and and we get our mortgage, and really it's really like learning how to self-direct this stuff. But first, what you need to do is find your money. And, you know, I had a comment one day recently on my digital ad from somebody that said, you know, oh yeah, I'm because I left my job at 46, and this person was like, oh yeah, I'm 45. Do you think it's possible to leave at 46? And I was like, well, that's exactly what I did. You know, I figured out my stuff. I was doing my spreadsheet and restructuring when I was 45, and I left my job when I was officially 46. And again, the way that I did it is that I realized that I was sitting on all this equity, you know, especially if you're from like one of these markets, like a Vancouver, a Toronto, you know, these kind of markets where there's been a lot of appreciation in our property. And if you've held it for some time too, you've paid down, it's amazing what people are sitting on. It's very common for me to get on a phone call with somebody who's sitting on $500,000 that they can free up with some restructuring. And that's life-changing, you know, because you can take that and you can invest it. You can put money in your TFSA, you can invest it making double-digit returns. And really, like, that is life-changing. Like, that is a whole nother salary right there. And then you can, you know, shift and pivot for what you need. Do you want a wealth build? Do you want to have that monthly income for your cash flow? Do you have debt reduction? You know, those are kind of the three main areas of goals that we try to work with. And the cool thing is that the people in the Beyond the Banks community, the resources that I invest with myself and are available to the members to learn all about and be connected with, you can shift and pivot. So when I left my job, I went from sort of wealth building to monthly cash flow, because that's what I needed. I needed to live off this stuff so that I could do other things. And now I'm getting to a point where I can shift back to wealth building. So because I don't necessarily need the cash flow that I needed during these past couple of years. And that's the cool thing, is these people, you can pivot and shift, and then you can create diversity as well. So you can, you know, be investing in doing, you know, one strategy with one company and be doing some other strategies, long-term wealth building with other companies. You know, Ava's been on our member call a couple of times now, and a lot of people are very interested in the projects that you guys are doing, because you offer such great flexibility for you don't like, a lot of people think you have to be like these multi-millionaires to do this thing, and you really don't. And you know, if you I mean, the great thing is, like, you guys go down as low as $10,000, and you have quarterly payments, which is great. So it gives some cash flow. So if somebody is borrowing money from a HELOC to invest, they have some cash flow to cover that interest, and you don't have to be an accredited investor. And so, you know, most of the people that I work with are, you know, below the accredited investor level, right? And it's, yeah. So, I mean, I don't know if that, so it's really just using your own money to lend out to active investors, essentially. Some of the typical stuff, you know, you're on title of a property, you know, the stuff that you guys do, you're obviously, you know, investing into a limited partnership. But all in all, you know, you're doing wealth building, you've got that cash flow, and you're utilizing your own funds and getting them working in a different way.
Incredible.
How incredible is
And
that?
yeah, and what we, just like Jodi said, what we noticed initially when we started in the space a couple of years ago, myself, I was a general contractor, builder, developer here in Vancouver, building single family and multifamily. Ava was a real estate agent for 10 years, but we noticed the need that the Canadian investor had, because it was either buy a condo downtown Vancouver, buy a condo in Toronto, or buy a secondary home and try to rent it out and be in negative cash flow. It seemed like there wasn't a lot of product or vehicles they could invest into. There was a conventional kind of, you know, the stocks and bonds, or putting your money into registered funds. But having these alternative investments actually all racing and all you know, working hard for they invested to, then they can choose and pick, hey, who do I want to invest with? What do I believe in? Do I believe in private lending? Do I believe in mortgage investment corporations? Do I believe in REITs? Do I believe in limited partnerships? You know, what type of market do I believe? Is it commercial? Is it office space? Is it multi-tenanted residential? So the investor today is getting a lot of more options. Unfortunately, on the Canadian side is much less than the options that the US investors have. But we feel great to be that extra option, be that extra vehicle for the investor to invest into. And just to add that to that as well, we're not only marketing our product on our show, our YouTube show, and on our you know, content that we send out, we bring on a lot of other experts who happen to have other types of vehicles. Diversification. Yes. So that's the key. It's the importance is to get involved. Like Ava's parents we always use your parents as
We always
as
use
an
my
example.
I always use my parents as an example too.
So 30 years
30 years,
accountants,
yeah.
both of them,
Yeah.
you know, earn a decent living, but they don't qualify to be accredited investors.
Exactly.
And they're, you know, you're speaking about your dad all the time. Sorry to take the
No,
words out of your mouth.
No, please.
But,
I love telling that story.
you know, it's that old way of thinking is build your money in your bank account. Yeah, it feels great when, you know, you have savings and you're building it, but with what's happening with central banks, with what's happening with money printing, that money is actually being worth less and less every day. It doesn't mean you should invest all your liquidity into investments, but to diversify, to at least to know such options exist, to then you can kind of
Absolutely,
make a
yeah.
decision, hey, what's this team I want to invest with?
Everyone's end goal is to have more money in their bank account. And it's just all about how do we achieve that? For my father, for an example, he still loves to work his 10-hour days. But Dad, what's your end goal? Your end goal is to watch a bank account grow. So let's achieve that in ways that it's going to, you know, benefit you and open up some time, because time is money and time is everything, and time goes way too fast. So we need to enjoy the time that we're.
And Jodi, talking about, go ahead, make that point. I just got to
well, I was going to say, like, so my sort of after high school job was, I did like lots of waitressing and bartending, all that, but I always worked at a bank. I worked at a bank as a bank teller. We were called counter officers back then, but I was a bank teller. I even got robbed. I got robbed at, like, you know, yeah, I have a robbery story. Oh yeah, the note. I was the one, you know, I was like, oh, yeah, yeah, it was quite comical actually. It was like the 𝗖𝗣𝗜 of robbery. He got out of jail on like the Monday for armed robbery, robbed me on the Wednesday.
Oh my
He
God.
like was running down Hastings. He tripped on his own 2 feet, wiped out. Some civilian like punched him, and then the cops were there. I mean, it was like this whole thing, right? But anyways, but you know, I learned a lot, and I did eventually work at the bank. I think it's a London Drugs there now, but it was a CIBC kitty corner to the Vancouver Stock Exchange. So I had the brokers coming in all the time, right, with their big checks and smiley faces, and then I worked the business line a lot, and it was really neat to get that exposure, not only the bank product exposure, but it was really neat to get exposures of, like, you know, how other people are, you know, making money, building wealth, what's happening at the stock market, all that kind of stuff. And you know, it brought me to a point where when I actually got into sort of my career job and I was making, you know, my first sort of, you know, made some good money, I was like, okay, what do the wealthy do? Like, not that I was wealthy, I was like just starting out, but I was like, I wanted to be smart with my money. I wanted, because I saw people get, you know, corporations just disposing of people. I saw that within my first year. I just saw, it was like people were just disposed of. And I just thought, you know what? I need to, this might not be forever. And I need to understand, like, what are the alternative ways? And I got involved with, you know, again, I did my stuff with real estate, thank goodness. But I started thinking, like, I got involved with some of these, you know, these, I don't want to name any names, but, you know, some of these big banks with their securities divisions, right? And thinking, you know, and I've done the paper gold thing that got wiped out. I've done this, I've done that. None of it's panned out. None of it's panned out. All of it for 15 years, I mucked around. All of it was a disappointment. And I just sort of started to see, you know, that, like, just the constant spins, right? Like, oh, you did, you know, 32% on pizza, but then I'd like owned pizza for 7 years. So divide that by, you know, it's like not really that impressive. And then everything else was underwater. So so really I was like asking the questions, like, and I would fortunately had people around me that, because I was open and transparent and asking, and then people around me were like, well, this is what I do. This is, check this out or check that out. And I would check those things out because I'm always open. And it was quite amazing. And, you know, the thing about it is that we go through life and we're like, you know, we go to school, we get a job, we buy a house, we invest our RSPs into mutual funds. Most people don't even have TFSAs that I talk to, or very little. And then some people are still like, oh, well, I have a pension. But what if any one of those things drops off, right? What if the stock market crashes right when you're retiring? What if you lose your job? What if that pension's not there? Like, look at the people who worked at Sears and, some of those big companies where they always thought they would have a pension and then they went bankrupt. You gotta have a backup plan to all of these things, get those multiple streams of income going, get some alternative investing going, and learn and understand. I have 3 main money rules. Understand what you're invested in. Can I sleep at night knowing that what I'm invested in, I understand? And what is the exit strategy? Got to understand the exit strategy. I talk to people all the time, and they're in investments. I was like, what's the exit strategy? And they're like, what do you mean? Like, they don't have any idea. Well, I'm like, what needs to happen to this project in order for you to get your principal and interest back? It's a really simple question. And you'd be surprised at how many people don't know that. And then, if you like stock, I mean, the stock market's been fantastic, right? But, the people who I know that have done well in the stock market are people that have educated themselves on technical trading, and they have their emotions in check, and they have stops, so they know what their exits are or trailing stops or whatever. Same with Bitcoin, right? They got educated. And whatever it is you're going to do, there's a million ways to make $1 million, right? But just get yourself educated so you understand what you're investing in. You can sleep at night, keep your emotions in check, and know your exit strategy. And I love passive investing because my emotions aren't all over the place. I did technical trading, and it's like just daily decisions. It's like, oh, should I have done this? And I bought some Bitcoin. I'm like, oh, I wish I would have put more in, and I wish I would have, it's like, stop. Like, I don't want that in my life.
Yes.
Like, being able to do my thing. And
for sure.
Yeah.
Just to add to the passive investing side, I mean, as being a limited partner in a limited partnership of an asset where you got the GP who's a sponsor, who's kind of managing the whole project, and their feet is held to the fire to make sure the asset performs well, because they get compensated from performance fees and management fees. This concept of private equity, for limited partnerships was initially only reserved for institutions. You had huge firms out there, the Blackstones, the KKRs of the world, who brought in institutional investors like family offices, pension funds, university endowments, and they had all this capital. They didn't know, they didn't have a money-making management team. They just had the money sitting there, so they would use these money managers, these funds to work with the money and get a percentage of it. Today, we have the same concept available for the retail investor, for the everyday investor. These limited partnerships, this concept is highly regulated through different commissions that are across multiple provinces in Canada. In the US is mainly the SEC. Is one body that looks over it. But there are options. You can invest in real estate without actually buying a piece of real estate or having to renovate or build something. That is the kind of the first level that we kind of try to get the message out, and it's to us is like incredible because we deal with it every day. But some people don't understand that, don't believe it, and it takes a bit of education.
People are in usually chaos. Like Jodi was kind of like, what do I do next? Most people are in chaos, and it's like, hey, listen, you don't have to live like that.
And one of the things with my program that I wanted to make sure that I did not have in my program was racing to deals. Like, I am a big believer of get your financial foundation structured for this type of lending and then go shopping. And the people that work with the partners that I work with in Beyond the Banks, who I also invest with, they're all, there's no shortage of projects or opportunities. You go in when you're ready. So you're not, financial stress is some of the worst stress, a person can have. And I don't like that rushing into things. And I don't want to create that environment. in my program. And I really like people just kind of calm down, get their head on the shoulders, get their structure set up, and then like figure out what they have, and then make the moves, make the calls, and say, okay, I'm ready, right?
Learn the
I think it's so
basics.
important. Yeah.
Learn the basics, and I mean, anything in life, the best at it, always the sophisticated people. I have a story I can share. Is not investing or real estate related, but having a coach and having a system in place to better yourself, no matter what it is. So I've been riding motorcycles for 20 years, and I'm a speed guy, so I ride motorcycles. And I went for motorcycle riding with a doctor friend of mine. I'm not going to mention any names. And he doesn't seem like that motorcycle riding type of guy, but he's just a doctor. He happens to be an ER doctor. And we got on a bike. We went on a cruise, and on a C2 sky highway where we could kind of go a bit quicker. He smoked me, like just destroyed me. And I've been writing for 20 years. I'm like, hold on.
Oh, really?
This guy must have been in college or university. I don't see him as a guy who was writing all the time. How could he write so incredibly? That shocked me. So after I kind of had a conversation with him, he's like, oh yeah, I take courses and I go to writing school, and like talking very casual, like is normal. I never went to writing school or took courses on how to write. I was pretty much self-taught when I started. But that shows even in finance, if you're planning financial independence, or if you're planning, in your investment goals, bringing on a coach who can start from the fundamentals and then is a helping hand through the process to then also provide multiple, investment opportunities that exist. That is the most incredible and most. It seems common sense, but a lot of people miss that point. And
It's true how your life can change around once you.
Well, and it's amazing, like, you hear about the water cooler, like the stock tips at the water cooler, right? It's like, oh, well, do you check out this or check out that? And then people feel like, oh, I got to do, but I got to get that stock, or but maybe they don't have their platform set up. They don't know how to even buy a stock, because they don't, that's a whole learning curve in itself, like I took a Bitcoin course recently, and it's like, wow, you've got your this type of account that converts the fiat to the Bitcoin, then you got to go to the wallet, and then you got to go to, you got to figure out your trade platforms. And I mean, it's a whole thing, and trading the stock market's the same. And if you don't, it's great to have the best stock tip or the best real estate tip or whatever in front of you. But if you don't know how to execute on that, and you don't really understand what you're doing, that's where we get ourselves in trouble.
Yep. And exit strategy. Also,
yeah.
Exit. So let's say, okay, you got a tip and you invested. What is the plan? Are you invested forever? Tesla is doing great. I talked about Tesla before. It kind of went hyperbolic. But what's the exit strategy? Is what is that return you're looking at? So yeah, I mean, great points, great topics we're discussing. Could you possibly share with us, and you don't have to share any specifics, but a case study or a scenario of someone who, I mean, you were touching on this earlier, but someone who came on, took the course, and it was able, with what they learned, with the team that they had, with having a coach like yourself, and then they were able to start the process for that financial freedom, or making smart investments, and reach whatever goal they had. So maybe you can just share a story or
yeah, definitely. I actually get beautiful like notes and texts and emails all the time of like how I was able to give people like the courage and the education to be able to do this stuff. But an example I can give you, even as my parents, who never have had a TFSA, they're like, just never touched it, like a lot of really misunderstood information about TFSA out there as Canadians.
Could you say quickly what a TFSA is, just for America?
Oh yeah, tax-free savings account. Yeah, so tax-free savings account is like Americans' Roth. In some, it's basically earning. It's a vehicle for putting money in, investing it, and the interest that is earned is the tax-free portion. So if you have it in, say, like an RSP, or if you're in the States, you have it in IRA, you're deferring your tax. So the idea is that when you go to retire and your lowest income, your retirement income, then you start pulling it out. So you're paying a lower tax bracket. With the TFSA or the Roth, you're just able to pull your money out and not pay tax on it, which is great. And we only have so many contribution dollars that we can put in it. The Roth is a little bit like our RSP, where you kind of have a window of opportunity in a calendar year plus an extra couple months to top up your Roth for last year and this year kind of thing. Whereas the TFSA, we can go back to 2009, and as of this year, we can put in $75,500 contribution money to start investing. You don't have to put in 75,500 if you don't have it, but even if you start with 50 or 30 or whatever you have, it's a great vehicle. And all of these things are vehicles, and it's what you put in the trunk of the vehicle that really matters, right? And a lot of people they think RSPs, TFSAs, they mix that up with mutual funds. So they just think, so they're like, I'm not going to touch that. That's all mutual fund stuff. Mm-hmm. That's mutual fund is the type of asset that you can invest in, but you don't have to invest in that. You can self-direct this. And in Canada, we call it arm's length mortgaging. In the US, we call it investing self-directed, or investing through our IRA, or investing through our Roth. But we actually have a term here in Canada called arm's length mortgage. And then, so with my parents, they topped up their TFSAs last year. They got into a deal. They are earning double-digit returns on that deal. The way that we're structured through this very unique strategy that is available to us, that is CRA friendly, I'm able to build a framework for them where they're able to earn, between the two of them on their investment, they're able to earn $60,000 a year. And then 40,000 of that 60,000 is tax free. So then 10 and 10 on my mom has $10,000 taxable income, earned income, and my dad same thing. And so they're below their 79,000. They still get their pensions, because you don't want to mess with a pensioner with their pensions. So they're well below that, and they're earning this tax-free money, and it's really wonderful because they're able to preserve their net worth. And this is another thing. It's like, learn about this as soon as possible, because you want to preserve your net worth. Like, I look at, I talked to someone, say 6 months ago, and they had X amount of dollars to work with. And then you talk to them 6 months later, and they have, maybe $20,000 less or whatever it is. And so the idea is invest your net worth, and then use the interest earned for your, debt reduction, your vacations, your wealth building, your whatever. Just when we're eroding our net worth to buy things like cars or whatever. I mean, I just recently, last December, I wrote off my 13-year-old Volvo, and it was my fault. And it was a front end, like I rear-ended somebody, and because it was so old, it was like, didn't take much for it to be a write-off. And I'm not like a big car person, but I did want to go electric, and I did get into a Tesla, and I had the money to buy the Tesla, but instead of using that money to buy the Tesla, I invested that, made double-digit returns that cover my car payment and my car insurance, and a little bit extra to be paying down. And I have kind of almost like a little business unit for that Tesla going. And when I go to get a mortgage, that money that is invested in a contract tied to a house is going to look better for the mortgage broker than just having it sunk into a car. And I got a low rate on the financing and everything. So
it's the formula. It's actually a formula. She's when she's speaking, I'm thinking like math. Hey, if you can use your investment and then use it the right rates, it's all about this formula that you could use, and that's truly incredible. I would like to go back to Beyond the Banks and talk about. You mentioned that you guys have events. Obviously, Ava has spoken on those events before. Tell us more about the events that you have, the type of speakers that come on, and how is that organized? Is obviously I'm currently is online. Do you guys have in-person events? How is that, the networking within the group that you've created?
Yeah, I mean, right now it's really, I have people that join my program, and when they're in the program, they have access to the course, the platform, all the videos and resources in it. We meet once a week on Wednesdays at noon Pacific every week. And there's, different guest speakers that come in. It's people that are, we definitely, we have the partners around us that, that we use, that I have experience with, because I get like random people calling me out of the blue, and just like, hey, they kind of figure out what I'm doing and they want to be on the call, and people really, for me, need to be vetted, because there is a lot of stuff out there that is I don't know. I like to be working with people that I've invested with and that I'm close to, or I have some experience with. And as people join the course, it takes about 8 weeks. It was designed as sort of like a weekly drip, but with COVID, people were like, hey, can I just like I have 2 weeks, can I burn through the course? So, I just opened it up in that sense. And then, yeah, sort of over an 8-week period, anybody new coming in at some point is going to be seeing the guest speakers. I have an amazing mortgage broker that I bring on, 𝗖𝗽𝗶𝘁 of the Appraise Group. He's here in Vancouver, but he services all across Canada, and he actually can help Americans out who are investing in Canada. And he does a fantastic talk on the Smith maneuver, how to mortgage up with the Smith maneuver in mind, and lots of other really cool things. And I have an insurance person that comes on that talks about some really cool, sophisticated insurance strategy, and how you can like do insurance and then borrow back off that insurance, almost like a HELOC, like a readvanceable mortgage, in the sense you can borrow back off your insurance policy 90%, and that frees up some money, which is really cool. And then I have, partners like 𝗖𝗽𝗶𝘁 is becoming a regular on the group calls, and there's, several other people. So I just want to make sure that everybody gets sort of flush through, everybody who's in the course, and then they can get to know them. So we have sort of like case studies inside the course, and then the idea of the guest speaker is like the guest speaker come on and talk about the latest and greatest. So when you guys have, whenever you have a new project, coming on and talking about the new project and what you're doing, and then people can get exposed to that, but they already are aware of what it is to invest in your type of investment, right? So there's already some familiarity. They know how the risk mitigation looks and the due diligence that they need to do, and they've maybe even already been in touch with you and had some dialogue, or had a discovery call, or maybe be in your portal watching for things. So it's creating familiarity. And the more that people get comfortable with what they're learning, when there is a new opportunity, you're not starting from scratch going, okay, what is this? I want to invest in this. It sounds really good. And like, I don't want that panic investing, energy in the course. I want people to really be comfortable. And by the time that, you guys say, for example, you guys have an opportunity, people are going to be comfortable with what you're doing and what you're up to and who you are as individuals and as a company. And they've gotten to know you. Maybe they've started listening to your podcasts and that kind of thing. So that's kind of the idea of it, is really to set the stage there.
Yeah, and we kind of there's a lot of people that listen to our information, our YouTube show. Yes. We have a massive exposure on LinkedIn as well, and I invite everyone who's either, if you're looking to start in investing, if you're already investing and you want to kind of have that coach, have a program in place to look at Jodi's Beyond the Banks program and system she has in place, the course, we're not there kind of plugging and promoting, just saying, hey, this is the only offer that exists, or this is the only opportunity that exists. No, the investor needs to have multiple opportunities, and relative to their comfort, they can invest with our product. And that's a lot easier managing such an investor who at least saw opportunities and then decided to say, no, I want to invest in apartment multifamily in the US. We don't want to be working with an investor who says, oh, I wish I would have invested in the stocks, or I wish I would have, invested in a MIC or in a REIT. So it's great to have this option. So we definitely promote Jodi's course, Beyond the Banks, and we'll cover all that information. What's the best way for people to get in touch with you, Jodi, when it comes to, in particular, the course?
Yeah, definitely. Thank you. I kind of have a bit of a process. So the best thing to do is to go to www.beyondthebanks.com, and you'll see there's a webinar there, a masterclass. And you can watch the masterclass, and it sort of, kind of talks about, this hidden funds and hidden money and what you can do there and what this is. And then if it's piquing your interest, there is like an application, a survey application, just to make sure that, you qualify and all that kind of stuff. And then there is an opportunity to book a call, and you can book a call and have a consult with one of my team members. I used to do all my consults, plus I was doing member calls, and I was like, I can't do it all. And I just don't want to give up my member calls, because I love those strategy calls. That's like the meat and potatoes of it all. And so I have an amazing team that I've trained who do the consults. And yeah, if you join, then, you get, we have a private Facebook group, we have our weekly meetings, and of course you get access to the course and the strategy call with myself.
Incredible. I love what you were telling me about your parents. You're going to have to jump on a call with my parents.
It's taking a lot. Like, I'm trying to get them to like do something with their RIF. And she's like, I have the paper, she has the paperwork, but it's like, well, fill it out. Like, it's just like, and it's like, oh yeah,
their mindset in a certain way, right? It's a little bit more.
Yeah, and I'm watching the RIF go down, and it's like, I've watched it go down and just eroded over the past like 2.5 years since I've been saying, like, let's get your RIF like invested, so then we can stay ahead of this erosion, right? Anyways, I got to crack the whip on her this week.
For sure. And just to add more, Jodi's book.
Yes.
So we are offering, so our people on our live webinar, they've already provided their email address, so they'll get a copy of the Kindle version of the book sent by me, yours truly.
Yes.
But we have 3 more spots. So if you're seeing this on YouTube, send me an email. Be quick. So this is going to probably be posted tomorrow on YouTube. So send me an email and I'll send you the Kindle version. If you send me an email, unfortunately, I can't do it, but you got to promise to go on Amazon and give her a 5-star rating, because she fully deserves it.
She does.
And maybe we can come to a conclusion and wrap it up. But what do you think? Maybe.
Of course.
Yeah.
Jodi, we appreciate you so much. Should I ask her what is your number one best advice that you would give to somebody looking to be a passive investor? Let's end.
Well, get educated so that you know what you're doing, and so that if you are talking with somebody who has an opportunity, because soon as people hear that you have, that you're a private money lender, or that you're looking to money lend, you can get like lots of different people coming out of the woodwork. And you have to really be careful and know what due diligence you need to do to make sure that you are safe. And that's through education, really.
Great advice.
And I'm here to educate, so
Absolutely.
happy to help. Yeah.
Really
You're
appreciate it.
incredible, Jodi.
Thank you for
so
taking the
much.
time. Really appreciate it. Love to have you on again at some point.
Absolutely.
And thanks everyone for watching, and have a wonderful day.
And thank you for
Thank you so much for inviting me. It's such an honor. And Ava, we got to maybe we can have both of you on a group call in early April.
Wonderful.
Absolutely.
We would love that. We're
That'd be
bringing some
nice.
good deals to the table. So
Yeah, for
Thank
sure.
you so much.
Awesome.
Thank
Bye-bye.
you.
Take care. Bye-bye.